Is America losing its edge? European and Asian markets are surging while US markets lag. Will this continue? And how should investors position their portfolios? You might be surprised by the answer. Hi, I'm Ben Fawcett, portfolio manager at CG Wealth Management, and in this episode of Connecting the Dots, we'll break it down. This year, many global markets have posted strong returns. For example, Germany's DAX is up 20%, and emerging markets such as China, Brazil, and Chile have also rallied. And keep in mind, this is in the face of potentially punitive tariffs from the United States. Conversely, US markets, such as the S&P 500 or the NASDAQ, have been laggards. Why has this divergence happened? First, valuations. US stocks are expensive by historic standards, while international stocks have more attractive valuations. Second, currency dynamics. The falling US dollar has given a boost to the value of international stocks when you convert them back to US dollars or Canadian dollars. And third, there's been a significant economic shift. The US growth model has been helped by massive government spending funded by debt. Ballooning interest payments due to this debt have made this strategy unsustainable in the long run. Conversely, Europe and China are just starting spending cycles that could go on for years. This is in part driven by changes in US tariff policy, as well as removal of US security blankets. Despite these shifts, it needs to be remembered that the US economy is fundamentally strong and is home to some exceptional companies. And also keep in mind that Europe, Japan, and China face their own challenges, such as aging populations and complex political dynamics. So what should investors do? Diversification is key. The good news is that investors don't need to guess if Chinese tech, European defense spending, or US economic growth will be dominant. There's an old Wall Street saying, diversification is the only free lunch in investing. Investing internationally isn't about avoiding the US, it's about capturing global growth and balancing risk. A thoughtfully constructed, well-diversified portfolio that contains international and US investments is better able to navigate uncertainty while also capturing opportunities globally, including opportunities in the United States and in Canada.